What level of returns can investors expect from in the private debt market compared to, say, TDs, term deposits?
Private debt is obviously a very different asset class to a term deposit. But if I take one of our funds as an example, we have a vehicle that's available for retail clients. It's an unlisted fund called the Metrics Direct Income Fund. That fund provides investors with diversification across 250 individual borrowers. The income is distributed to investors on a monthly basis, and it's delivering a return over the last 12 months in excess of the RBA cash rate plus 3.25%. So very attractive for a short-term liquid fund in comparison to, say, a longer duration term deposit. But the return profile in our asset class really does vary from anything from low yielding investment grade corporate borrowers, where the rate might be, say, sub 2%, all the way through to higher yielding subordinated debt, mezzanine debt, where you might be charging a borrower in excess of 15%. But the role of private debt in an investor portfolio really, I believe, meets two criteria. At one end of the spectrum, it is an alternative to traditional fixed income. Well-diversified portfolios, well-managed, with appropriate controls, terms and conditions, floating rate exposures, short-dated loans, can be an alternative to traditional fixed income of bonds, or say hybrids, or even cash. At the other end of the spectrum, where the yield is higher, we believe it can meet a growth alternative or an equity market replacement. So investors, again, often are holding portfolios of equity to generate a franked dividend or an income, but they're subjected to a lot of volatility in terms of the market performance. As a result of investing in debt, equity wears that volatility risk, and we believe that we can deliver an equity-like income with less volatility and lower risk than outright ownership of equities. And so I think it fits two key parts of an investor portfolio. One, alternative to traditional fixed income. The other end of the spectrum is an alternative to equity market income-focused products.